What's good, ladies and gentlemen? So, Blackrock ETF inflows all of a sudden stopped. This is the first time it's happened in a little while. Why have they paused? Maybe because Bitcoin's not cheap enough. And we understand something about the way Bitcoin moves in terms of the bids and the asks. We know that when prices are dropping, people are buying. And we know when it's rising, people are selling. In today's video, I'm just going to break it all down for you on what we can expect from Bitcoin. I'm also going to introduce to you a little strategy that you can utilize as a day trader, but more so as a holder as well when we're trading back into the vector candles. And hopefully by the time we're done with that, you'll be geared with enough information to take that little strategy and use it in your everyday trading. So let's get with the program, ladies and gentlemen. If you are new to this channel, be sure to like and subscribe at the end of the video. Let's have a conversation. We get it all started off with this Blackrock Bitcoin ETF inflow. It hits zero for the first time. Oh my God, should we be concerned? No, because there's two things that we can see it as. BlackRock's starting to think of things macroeconomically speaking, or it's not cheap enough yet. Remember, they buy as it drops. We go into the table itself and you can see that they've not stopped buying Bitcoin since the 8th of April. And you're going to talk about what's been going on since the start of the ETF. It hits zero for the first time, and people are probably going to get concerned about it. Well, if we consider where we are macroeconomically speaking, it's not really started well for the earnings. Go over to Meta, missed their estimates. It gapped down last night, nearly $100 in out of hours markets, trading at the close at $493 a share, went all the way down to around 410. It's now managed to come back up ever so slightly. Hopefully in today's market, we actually see Meta try and recover back up. Well, they did close the gap from before, so it was kind of expected that they were going to do something about this gap. However, if Meta is missing their estimates, that could only mean one thing, that in today's earnings, which is Microsoft and Google, the heavyweights, if they too miss, that's going to be a bit of a problem for the market. Now, BlackRock being BlackRock, we know what BlackRock is all about. We assume that they know what's going on behind the scenes. A friend of a friend could tell Larry and say, yo, hold out on buying BTC. The markets are probably going to drop because Microsoft ain't going to be doing too well. So we're making assumptions right now. But going into the chart of BTC itself, you can see that Bitcoin is actually working its way down. And in my opinion, I believe that Bitcoin is not cheap enough yet to grant BlackRock to step in and pick up the ETF. So we go to the higher time frames. And we then look at it and say to ourselves, okay, then what more can we expect from Bitcoin in this current range? Now, at the start of the video, I did speak about a strategy that you can employ, whether you're a day trader or a holder. And we're going to get straight into it right now. So, yesterday, this was me trading the S&P. Now, the reason why I was trading the S&P yesterday is because there was a significant drop to the downside. And quite frankly with you all, ladies and gentlemen, it caught my attention because of how they were manipulating price, and they did a bloody good job of doing so. So the range that I was trading yesterday was inside of this zone right here. Okay, so just to show you, you can see this green vector candle right here at the lows, and you can see that there is a red vector candle to the left of the chart. Now, what you're looking for is when price, after a move to the downside or maybe a move to the upside, primarily this works for longs. Okay, so if you want to go long or buy, this is what you're looking for. So you can see the red vector candles taking a move to the downside. Then you start to see price slowing off. Now at this point, I was in a trade on the S&P in and around this range right here. And in this range, there was a blue stopping volume candle on the 30-second time frame. So if we go to the 30-second time frame and we mark it all out, you can see that from that point yesterday, when we had the big move up, if I show you, you can see we had the same structure in front of us. There is your stopping volume candle right there, the blue vector. That's what caught my attention. Then we saw a climatic red vector, which effectively set up the shorts to go short on the S&P, and then they instantly came back up again. Okay, now this is where I made the entry, so I'll show you the picture. This is what my screen looks like. It looks chaotic, but over here, as you can see at the bottom right, let me just bring it up for you so you can see. Down here, you can see that I've got a green vector candle, which was this green vector candle right here, all right? I made the long because I was trading back into the logic of price going back into this red vector candle. At the time, if you look, might not be able to see it, but this is the depth of market. I didn't manage to get a good screenshot of it, but we were at the lowest profile of the day. So I was using the confluence of the depth of market, the fact that we had the green vector candle over here that came into play all of a sudden because the S&P and the NASDAQ were just dropping non-stop to the downside, okay? Then we had this red vector candle over here on the 30-second time frame. We know that on the 1-minute time frame, it was exactly the same thing. And my logic was I was going to trade into that zone. Now, I only managed to take a small trade from this, and we only managed to pick up $4,013 from the move, and it happened in less than 90 seconds. But I was patient enough to wait, but I understood that this was the range that they were going to mark up again. Because in the S&P, there's always this relationship between the bids and the asks, because they've been hitting the bids for such a long time. That means people are going short, and then in some instance, there's going to be buy to cover coming into play, which means that those short sellers are more than likely going to actually close their positions. Unfortunately, that's not what just happened. You can see that they just continued to move up. And I would have made a nice handsome return on the accounts if I actually held the trade. But that's not what I'm about. I'm not interested in what I could have done. That's something you think about when you're having a cigarette or having a drink and say, yeah, you know what, I could have held on to that trade. Never mind, we'll start trading again the next day, okay? So that little return right there worked out favorably for us. Just an update on where we are with our funded accounts. We've got them right here. We're now at $127,000, 607 for the funded accounts that we've got. We go down, we've got all these accounts right here. So in total, there are about 12 accounts that I'm actively trading. I have made some withdrawals, and I'll show you, because this is a problem with the funded industry. People are like, what about withdrawals? Have you ever experienced any problems with them? So I've not experienced any problems with withdrawals, other than when you're with Apex, there has to be an element of consistency. You have to be using the right size, or you have to be sticking to the size of contracts that you're using, and make your strategy look consistent, like you're executing an edge over a period of time. That's what they're looking for. So let me show you an example of a withdrawal itself. So here we go. Here's something for you. So you can see right there, good things are coming your way, Constantino. So we made these were new funded accounts that I've got, and it was only 2 of them, where the minimum withdrawal for the first time is $3,000 on each account, okay? And what happens is you're only allowed to withdraw a certain amount over a period of time. And then after, I think it's 3 months, then you're able to withdraw whatever it is you want. Okay, so in this instance, we withdrew $6,000 from 2 accounts, and that's going to be coming to me by the 29th of April, and that is set up with Plain. Okay, but I'm overseas, so it's different for anyone in the US. Now, with that being said, going back into price action, just to put it into perspective on how you can do it for a holder, we go into Bitcoin itself, and we then say to ourselves, okay, then where on the Bitcoin chart am I able to exploit this idea as a holder? So we go pull up the daily time frame, and we look at it like this. In front of us, where do we see a vector candle? Well, you can see it right here. Happy days. So the logic would say that as a holder, I may expect price to come back into this zone. They've already tried it with this area here, and they may actually continue to mark it even lower. So I've got to pay attention to a couple of things now. Where are we macroeconomically speaking? Where are we in terms of news announcements? Meta, they missed their estimates, and that's a big market cap to miss estimates. We've got Microsoft, we've got Google. And if they do buck the trend, then boy, Bitcoin in principle will start shooting up. But Blackrock giving us the clue that they're not actually picking up any ETFs doesn't mean that they won't. They could start buying today. But at the close of today's market, BlackRock and everyone else will know where we stand in terms of where the big caps are with their earnings. Remember, we said it. They need to have wonderful earnings to really suggest that this rally to the upside is going to continue. But if Bitcoin's following Wall Street, and now Bitcoin BlackRock ETF, no inflows for 1 day, let's make the assumption that BlackRock, or should I say Bitcoin, is following the stock market. So that would only mean, as a holder, you are paying attention to price coming back into these vector candle zones themselves. That could make sense with why BlackRock may not be buying the ETF just yet. They might be waiting for a zone like this. We go into the bids and the offers on Bitcoin, you can see that not really many bids are coming in right now, and that's quite concerning because the only nearest point of interest in the chart, as you can see right here, is all the way down here at the 60,000 point. Like I said before, the 60,000 zone could be the new 20K range. And we had interest before on Bitcoin. As you can see, we had some big orders here. They originally put 15 million as a bid, but they actually transacted 20 million. So that shows strength. And then we've got here 8 million when the original order was 521,000, 8 million came in. So that's really important for us to understand. Okay. Now, rolling over into other news that could impact the marketplace, we've got here that crypto market stumbles amid arrest of the Samurai wallet founders. It did cause a little bit of a drop in Bitcoin, but more importantly, the EU now is starting to get into regulations to combat money laundering. Bitcoin itself has got nothing to do with any, in my opinion. It's not Bitcoin's fault that we've got regulations to come into play. It's people that use the Bitcoin. And this is what's forcing the hand of the EU to start getting some money laundering or some regulations to step in. They did it in Forex with the 1974 Anti-Money Laundering Act. So they're going to more than likely do the same thing in cryptocurrency, which in essence is a good thing. Some of you might not say that, but what we've got to be careful of is if they do start regulations in cryptocurrency, I think the first thing they're going to do is start hitting leverage, and they're going to start capping traders from using high leverage. Back in the day, you could use 5,000 to 1 leverage on Forex. Now, in certain areas, you can only get up to 50 to 1. And that's like, oh my God, that is amazing. Now, going into price action, looking at it going into today with the news announcements, I would be very, very cautious with today because we do have a very interesting news announcement coming up, which is the Bank of Japan policy rate, which will be tonight. So after the close, after Microsoft, after Google, we will have the Bank of Japan giving us some insight into whether or not they're going to actually step in and start lifting the yen, which will naturally bring the dollar down. That's what we want to see. Hopefully they intervene and start lifting the yen. Now, with that being said, ladies and gentlemen, I hope this information does serve you well. With regards to the strategy, if you are a day trader, similar to what I showed you on the S&P, you're looking for red vector candles for price to trade back into. You're waiting to see price stabilize with stopping volume candles. And for holders, what you're looking for is you're looking to trade to the next and nearest vector. As a holder, if you're looking to buy at these points, then you've got to give Bitcoin a chance to move into those ranges. And when it does get into those ranges, you don't necessarily have to buy straight away, but you need to be focusing on the chart at that point in time, because it could mean that if Bitcoin were to come all the way back down towards this green vector candle zone itself, then we would effectively be waiting for price to try and stabilize inside of this range, similar to what we see over here, as you can see down here. And hopefully we see this. This is what I want to see from Bitcoin. I want to see a red vector candle so I can trade back into it and load up on spot or as a holder and improve the odds of a trade going in my favor. Notice the same setup on the S&P on a 30-second time frame is exactly the same on Bitcoin on the daily chart. Go back in the chart, ladies and gentlemen, and find yourself red vector candles and then pay attention to how price behaves afterwards. Isn't it ironic how the same stopping volume candle that appeared on the S&P on the 30-second time frame is exactly the same stopping volume candle that appeared on Bitcoin on the daily time frame on the 23rd of January, 4 months ago, ladies and gentlemen. In other words, the same thing happens all over the place. I hope this video can bring you any insight into how to approach day trading. Again, if you are new, welcome to Traders Reality. My name is Tino. Hit the like button, subscribe on the way out, and I'll be checking in with you all tomorrow morning to see how Microsoft and Google ended up. Please trade safely, ladies and gentlemen, and I'll be checking in with you soon. Peace.